A health insurance helps you pay for your medical expenses with insurance money. Today's skyrocketing medical expenses have made such insurance almost a must-have. We can submit medical bills, get reimbursement, or even avail cashless facilities at the network hospital of the insurance company. Sounds simple and convenient, right? Not so much though. In most cases, Indians are more often than not skeptical about getting a health insurance cover, not because they do not need them, but because they're not half as aware about the nitty-gritties of getting the right insurance for them, about the premiums they'll be paying, about the kind of investment they should be making towards health insurance, and even about the process of claiming the insurance. Hello and welcome to the second edition of Financial Express Manager Money Health Insurance, a must-have for all Indians. And this edition will host knowledge sessions around health insurance and do's and don'ts of it. The official hashtag for this monthly knowledge series is hashtag FEMYM. Do tag us on your posts and queries around anything money, investment, and personal finances. With that, let's head straight to our first session, which is a fireside chat on ABCD of buying health insurance. Let's welcome our speaker, Jen Matthews, who is the co-founder of Vital. The session will be moderated by Shaleen Agarwal from Financial Express Online. Over to you.
Hello and welcome all to this second edition of Manage Your Money. I am Shaleen Agarwal from Financial Express. Today we are discussing the ABCD of buying health insurance. We have with us Jen Matthews, co-founder of Vital, which creates personalized health coverage plans, including health insurance for people and SMEs. Jen, thank you very much and welcome.
Hi, Shaleen. Glad to be here. Hi,
Jen,
everyone.
very basics. What is a health insurance?
Okay, it's a very good question. A health insurance basically is a product, as actually a financial product that allows you to secure yourself against any unforeseen health expense, and more importantly, protect your hard-earned savings from any losses that you may suffer for the spends that you will have to spend towards a health expense. And most importantly, it's a financial product that allows you to get access to quality healthcare.
To buy this, you pay a monthly or an annual premium?
Yes, so basically a health insurance product works in a very simple way. You pay a set amount of premium. It could be annual, and nowadays we also offer monthly subscriptions. These monthly premiums or annual premiums that you pay towards a particular cover amount that you have selected to get yourself protected against is the insurance part of the product, where the cover amount is going to be given to you on an annual basis. So what it means is you have chosen a cover amount of say 5 lakhs, 10 lakhs, 15 lakhs or 20 lakhs to cover you for each particular year. And the amount of insurance that you use in a particular year will get replenished when you renew the plan in the next policy year. The premium also will change in the next year. Maybe it will remain the same as per your age, or it may change because your age band changes in the next year.
Another basic questions: health insurance, healthcare insurance, Mediclaim insurance. Are these the same things or different things?
Okay, a lot of these terms are interchangeable and interoperable. Health insurance is rather a very encompassing change. You can have various kinds of health insurance plans. You may have indemnity health insurance plans, which are also popularly known as Mediclaim insurance. You may have critical illness plans that cover you for only critical illnesses and give you a fixed benefit payout. You may have hospital cash plans that give you payments for every time that you go to the hospital or every day that you are in a hospital, which again gives you fixed benefit payments. The most popular form of health insurance in India today is your indemnity health insurance, or like I said, properly known as Mediclaim health insurance. These are plans that cover you for the actual cost of treatment that you may incur towards the health expense. The health expense could be in the hospital, which is most prominent and most prevalent kind of plan, or it could be a health expense that you may have incurred outside the hospital, but only certain types of health insurance plans cover these kind of expenses. The most popular health insurance plan, like I said, is the plan that covers for hospitalization cover today.
And by hospitalization here, we mean the hospitalization of at least 24 hours, is it?
Yes, there is health insurance basically indicates one point, that the hospitalization cover is given to a person who's admitted to a hospital in the inpatient department of the hospital, not the outpatient department of the hospital. And when he's admitted in the inpatient department, he must be admitted for overnight or 24 hours. But there is also certain coverage in the health insurance plans in India today, which also cover daycare procedures. Now, these are procedures again Very important to understand, these are procedures that are done in the inpatient department of the hospital, but possibly because of medical advancements today and because of technology available, these are procedures that can be done within the one day itself. So say, for example, certain procedures like angioplasty, cataract, and all these treatments can be done within a one day in a hospital in the inpatient department, and the patient can leave. And this is also covered in health insurance. Each health insurance plan has its own terms and conditions. All conditions say that the person has to be admitted in the hospital for more than 24 hours.
So what you're saying is some plans do cover these day treatments as well, some plans do not.
No, so what I'm trying to clarify out here is in health insurance plans, the first condition is that it has to be inpatient. It should be more than 24 hours, but certain procedures and treatments require less than 24 hours treatment, and these are listed and these are specifically there in the policy that cover you in the hospital for even for less than 24 hours treatment.
Sure.
And those are called daycare procedures. That's the only exception.
Yeah. Sure. What is accidental insurance?
Accidental insurance, okay. Accidental insurance is purely like the term says, it covers you in case of an accident. Now, accidental insurance comes again, there are various ways of options in the accidental plan. And accidental insurance basically can give you a fixed amount in case of death due to an accident. It can give you a fixed amount as a payout in case of a permanent total disablement or a temporary total disablement. For example, there are some definitions of permanent total disablement. If in an unfortunate situation, someone loses the access to both his limbs or both his hands or both his legs, that's called a permanent disablement.
Sir, I'll have to interrupt you there. I'm sorry. Isn't that the purview of life insurance and not health insurance?
No. So accidental insurance, like I said, life insurance is a product that covers you that tells you that in case of death due to any reason, I will cover you. Right? I will give you a lump sum payout, and this could be illness, it could be accidents, it could be anything. However, accidental insurance basically tells you that I will cover you for conditions that have occurred due to an accident. An accident is something that is described as something that is violent, unforeseen, unexpected, and visibly can be visible externally. That's a very simple way of defining an accident.
Sure.
But so the accidental plan will only work in case an accident has occurred. And what it does is, like I said, it gives you a lump sum payout due to in case of an accident that causes a death or causes permanent and total disablement. Or accidental insurance can also cover you for treatment in a hospital, and it will again cover you for treatment into the hospital for a certain sum insured. That is the cover amount that you have taken.
Sure. And is accident insurance offered by health insurance companies or by life insurance companies?
Accidental insurance is offered by health insurance companies, general insurance companies. It is also offered in some form of riders with life insurance companies. So you can take a life insurance term plan, and alongside that you can take a rider, which is a add-on to that particular product that covers you, gives you an extra payout in case of an accident. So it is covered by all kinds of companies.
Coming back to the plans that give us coverage in the form of hospitalization.
Yeah.
Do those include hospitalization due to any reason, for example, illness or accident, or both, or any one of them?
Yes. So in health insurance plans cover you for treatment, any treatments that may be related to any illness, any critical illness, any accident, or anything that affects your health which you do not have any control on.
We spoke about premiums. I'll go back to that point. Usually when buying health insurance, people try to calculate how much premiums will they pay versus how much of the coverage will they get. Is there any ratio on how much coverage demands how much premium to be paid over the lifetime of the insurance policy?
Yeah. So see, when it comes to premiums and coverage, right? The premiums, of course, are determined by the type of coverage that you've taken. Now let's talk about health insurance that covers you for any hospitalization expenses. Now,
so hospitalization, but not the treatment outside hospitalization, that's not covered in this.
Yeah.
This example.
Let's just take the common form of health insurance which we know, and that covers you for all expenses that are incurred in the hospital. Now, hospitalization expenses, because you have to understand, depends upon the type of treatment that you've taken, the level of inflation and the Mediclaim, the level of medical costs at that point of time that you've taken. For example, the medical costs that were prevalent 10 years back is not the same medical costs that are prevalent today. Hospitalization insurance also takes into account the kind of treatments types you're taking. So, for example, things like robotic surgery, advanced treatments, and all that are available in today's time was not available, say, 5 years back. So, the treatment types change. So, the cost of health insurance is determined by the level of technology and the level of medical treatment that somebody is taking today. It is determined, of course, also by the level of medical inflation in whichever location you're at. So, for example, cost of treatment for a particular procedure in Bombay may vary from the cost of treatment for a particular procedure in Delhi or in Bangalore or a city like Nasik. So, each and every location has its own cost. These are some primary factors that affect cost of insurance. However, the most important factor, of course, is also the age of the person. Because depending upon the age of the person, the chance of a risk of a person going to hospital increases, or the kind of ailments that a person can get increases. So the age of the person comes into play out here. And finally, at the end of the day, you determine the cover amount that somebody is taking also determines the cost of the health insurance plan. So the premiums are effective, like I said, by the cover amount that somebody is taken, by the age of the life stage of the person at this point of time, the location where the person is located, and the kind of medical inflation or the medical costs that are prevalent during the time of taking the policy. All of this goes into playing a role in determining the actual premium or the cost that the insurance company is going to charge. Insurance companies charge a premium based on a portfolio. They charge it based on the portfolio of the entire person. They may divide that premiums into age bands, saying at these age bands in these are the particular premium rates. Insurance companies also divide premiums based on location. So it's a combination of the age and the location of the person, and of course, what is each cover amount that somebody will have. So it's basically, these are the combinations of how a premium is decided for a health insurance policy.
Is there a number you can give on a 10 lakh rupees cover? How
Yes.
much premium would one have to pay annually?
Yeah, so that's a very interesting question. So again, if somebody had to ask me today, right, a 10 lakh health insurance cover, what is the premium that someone could pay? Based on the benefits that are covered in a particular policy, the premium today for a 10 lakh cover in India today, and depending upon an insurance company, for a 35-year-old, say take for a 35-year-old, could vary between 4,000 rupees to that of 11,000 to 12,000 rupees or 15,000 rupees. Again, for each insurance company, it varies based on the type of benefits and all that. On an average, a 10 lakh health insurance cover for a 35-year-old should not cost you more than 10 to 11,000 rupees.
Okay, two questions there. So first of all, this 10 to 11,000 rupees or between 4 and 15,000 rupees, over what period will I have to pay it annually?
So you have to pay it every year. So this is an annual premium. The premium has to be paid every year, and it is, like I said, because the cover amount also is renewed every year. So today, for example, in year 1, you've taken a cover of 10 lakh rupees. If there's an unfortunate situation and somebody claims, say, 5 lakh rupees in that, the cover amount for the remainder of the years is reduced to 5 lakh rupees. But the next year when he renews his plan, again the cover amount available to the person will be 10 lakh rupees.
Is there a term limit to which to when the policy will remain in force?
No. So the regulator the insurance regulator had mandated for all health insurance companies to offer lifelong coverage. So today, when you take a health insurance plan, as long as you're keeping on paying your premiums on time, your cover will extend for life till you keep paying your premiums.
I'm a customer. I take a health insurance coverage today in my early 30s or my late 20s, worth, let's say, 10 lakh rupees.
Correct.
I expect this policy to continue over my lifetime.
Correct.
In next 30 years, 10 lakh rupees will not be same.
Correct.
10 lakh rupees will be very less. Is there an option that I can increase the coverage going forward?
Yeah. So, of course, one very important factor is, like I said, medical inflation, the cost of medical care. They can keep changing, and they keep changing year on year, and that affects cost also. So the cost of that affects cost of premium. But the same thing applies to a 10 lakh cover, like you rightly said. A 10 lakh cover today, 10 years from now may not be worth more than a 2 lakh cover today, because the medical cost would have increased. So it is also important for you to keep ensuring that the coverage amount that you've taken is future-proof to a certain extent. I wouldn't say that you should try to plan 30 years in advance, but at least when you take a cover amount today, you should look at a cover amount that you would have to incur for the next 10, 15 years. Insurance companies do a couple of things to try and mitigate this. For example, there's a concept of no claim bonus that is present. Now, there are certain insurance companies that give you a no claim bonus in case you do not make a claim this year. So to next year, your no claim, the premium, your cover amount doubles, or not doubles, it increases by a certain percentage.
Okay.
However, the unfortunate part of no claim bonus is it only works until you don't make a claim, because the moment you make a claim, it can reduce back to the system. So the only good option for you is, of course, that every 5-10 years you should reevaluate the kind of coverage you have, look at the medical costs that are there and prevalent, and see whether you have enough cover and take more cover. One good feature that many insurance companies have, and some insurance companies do have, is a feature which is not very noticed by customers, but it's a very important feature that says that I will give you the benefit of increasing your coverage without any underwriting, without any re-underwriting, if you stick with me for so many years. And that's a very big benefit. So that's one benefit that certain insurance companies have, which, if it is there, allows you to increase coverage at a given point of time if you are staying alongside an insurance company. And but very few companies actually offer that benefit, but that's a very good feature to have. The important thing, like I said, the reason I say that that's a very important feature is when you take a policy today and you're completely healthy, everything is right. But suppose someone falls ill or unhealthy, has to go to a hospital or develops a chronic condition. What happens there is his health now prevents him from taking a new plan, or prevents him from taking an additional cover, because his risk has now increased to a certain extent. Mm-hmm. Now that is a factor that comes into play. So it's very important to future-proof yourself. So when you're taking health insurance cover, do not think about just today. Think about 5 years from now.
When you say that a new condition develops, when it develops, it prevents the people from buying cover. You mean that it makes it costlier to buy new cover?
Yeah, I mean, it may make it costlier or make it prohibitive also, or it may prevent a person from buying cover. Okay. When you buy a health insurance policy, after you purchase a health insurance policy, as long as everything was correct when you purchased it, that you did not misdeclare, you stated the right conditions, the premium was correctly calculated, you have brought the policy. After you buy the health insurance cover, nothing can stop you from continuing that cover amount for life. Your premiums may change, but your cover amount will continue for life. However, what happens after you buy a health insurance policy, and if your health condition changes, although the insurance company cannot take away the cover that you already have or cannot prevent you from renewing the policy, it can, of course, deny you cover for increasing your coverage or adding added cover. So that is a big factor, and that is also one of the reasons why we always say that don't try to take health insurance when you fall ill, because that's the most difficult time to take health insurance. Take your health insurance at the right time when you're healthy, so that it comes into play when you are unhealthy.
Sure. Very interestingly, you mentioned a premium amount ranging from, in just an example, maybe from 4,000 to 15,000 rupees.
Yeah.
That's what I want to talk about. What is it that you get covered in 4,000 rupees? What is it that you get covered in 15,000 rupees?
So again, so that is, it's another interesting thing. So depending upon what kind of benefits that people have put in, right? You have insurance companies, although the nature of the product is very much common and similar, but there are a lot of benefits that people keep adding onto their products between insurance companies that kind of inflate costs sometimes to a certain extent. And also there are some very smart features that people can put in their insurance plan that allows them to take a very high cover at a very low cost.
Actually, before that, if we could talk about the basic plans. If I'm going for the cheapest available plan to me, let's say 4,000 rupees for a 10 lakh rupees cover, what is it that I will get?
So for example, for a cover of 4,000 rupees or 5,000 rupees for a 10 lakh cover today, you will get a cover amount. You'll get an insurance policy that covers you to a certain sum insured or a certain cover amount. It'll cover you for your hospitalization. It'll cover you for pre and post hospitalization. That is, pre-hospitalization are those expenses that are covered 30 days prior or 30 or 60 days prior to going to the hospital. Any expenses that you incur for your treatment, that could be a doctor check, a doctor visit, a diagnostic checkup that you had to do, or medicines that you had to buy prior to going to the hospital, that will be covered. Now, any expenses that you incurred prior to going to the hospital will be considered as pre-hospitalization.
In that case, who incurred those expenses while the hospitalization was not known, when the treatment was known?
In all cases, pre-hospitalization expenses are reimbursement based. So you go to the hospital, The hospital, after you go to the hospital, you have an option of cashless or reimbursement. But prior to going to the hospital, any expenses that they have been already incurred by the individual.
To claim those reimbursements, a person has to keep the bills and all the medical records handy?
Correct.
Sure.
They have to keep all the medical bills and the medical prescriptions and all the details available. They have to keep that with them. And at the time of submitting the final claim of the hospital, or what is incurred in the hospital, they have to submit these bills and they will get the expenses for the pre-hospitalization expense.
Same way you said about post-hospitalization as well. So after the person gets discharged and
Yes.
the treatment continues in forms of medicines or follow-up visits, again, those expenses are paid out of pocket of the insured or the
Yeah, initially it's paid out of the pocket because post-hospitalization expenses are incurred outside the hospital or maybe incurred in the hospital also, but these cannot be cashless.
Sure.
And what I mean, I'll explain what cashless is when I come to the claims piece of it. But these are bills that you have to pay by your own pocket. And then at the end of the day, you can collect all these bills together and submit it as one common bill, the reimbursement request to the insurance company that will reimburse you for those expenses.
Is there a time limit by which you can file the claim?
There is a time limit in terms of it. They say it should be a reasonable amount of time. There should not be a delay. The regulator has prescribed a very interesting condition. It said if there is no genuine reason for delay within the particular first 60 days after you've incurred those expenses, you should have submitted those bills. But in case there's an actual genuine reason why somebody is delayed and that the bills cannot be delayed, it can be accepted later on. But most insurance companies will shut the claim within the year in case nobody claims for those particular expenses.
So in that case, the money is lost?
In that case, the money is lost unless there's, like I said, the regulator is very fair when it comes to the customer, and they very clearly state there has to be a genuine reason why the delay has happened in submitting these bills.
I hope that the audience is taking note of all these things because it's their money online. You're explaining the basic health coverage, and then we took a detour to the claims. For basic 4,000 or 5,000 rupees cover includes pre-hospitalization and post-hospitalization. So
it will include hospitalization expenses, pre-hospitalization expenses, that is like we just discussed, 30 days prior or 60 days prior, depending. Insurance companies have different ranges. And post-hospitalization is after you leave the hospital, 60 days. And also it covers that all insurance plans today cover daycare procedures, like we discussed earlier. Daycare procedures are those treatments that are taken in the inpatient department of the hospital or a particular designated daycare center, which is capable of doing the surgeries and the treatments and all that, which are classified as daycare procedures. And usually insurance companies do give a list along with their insurance policy of these are the examples of daycare procedures that we will accept as daycare procedures. So all treatments related or similar in nature are considered daycare procedures. That is covered. And then post-hospitalization expenses, and ambulance charges are covered. So inpatient, hospitalization, all expenses, that is doctor fees, surgery cost, operation theater cost, medicines, equipment, all of that is covered. Pre-hospitalization expenses, post-hospitalization expenses are covered. Daycare procedures are covered, and finally ambulance, some cost related to ambulance. So in a nutshell, if you look at it, all treatments that are incurred inside the hospital for genuine medical treatments are covered within this plan.
And what's the difference with let's say a plan which is costing me 15,000 rupees a year?
So like I said, there are various benefits that you can add to a plan, right? A very popular benefit nowadays in the market is something called a recharge restoration benefit. Different companies have different names. Some people call it recharge, some people call it restoration, some people call it auto addition. There are various different there are various names of this benefit. So this benefit says that suppose you've taken a 3 lakh insurance cover, and in case due to an unfortunate situation during the middle of the year, 3 lakhs is exhausted. Suppose you've taken a 3 lakh cover for a family and 3 lakhs is exhausted, and now for the remainder of the year, that cover is over, right? There's nobody covered. But the restoration benefit in the plan will basically reinstate that 3 lakhs at a very low cost, at no cost at all.
Okay.
So basically, you typically will have the 3 lakh reinstated. That's a restoration benefit.
Sure.
Now, different companies have come up with different versions of the restoration benefit. One of the versions says that it will be reinstated once. Then there are companies that have come and said that it will be reinstated multiple times.
Sure.
So there are various options like that.
What about coverage? What about coverage itself? Other than hospitalization, do costlier
Yeah, yeah.
plans offer more coverage as well?
Correct,
What
right. So
about
this,
OPD visits?
yeah, so like I said, so then there are insurance plans that cover health checkups. They put the health checkup within part of the plan. So you have an annual health checkup that is covered within the plan. You have companies that have then come in and said that I will cover you for fixed cost for this many doctor visits. Either it could be online doctor consultations or it could be offline doctor consultations outside the hospital. Daily doctor visits that are not usually covered, that is covered. There are companies that then also have started offering a fixed amount of coverage for pharmacy expenses. So
Okay.
suppose all the day-to-day medical expenses or day-to-day medicines that you have to incur outside the hospital, I'll cover you for that. So there are limits of 5,000, 10,000, 15,000 also given for those.
But only medicines prescribed by the doctor on prescription.
Yeah, on prescription medicines, right?
Sure.
On prescription medicines. Then there are expenses that are related to, say, there are plans that also give you benefits for, say, Ayurvedic treatment or Ayurvedic Ayush treatments are there. That is covered in the plan. So there are various different kinds of coverages that people, anything related to health can be covered in the particular policy.
Are all hospitals covered in all medical insurance policies?
So yeah, so as long as it's a medically registered hospital, registered by the registered as per either the state or the central government has been registered as a state and central government, the hospital is there in any expenses incurred in the hospital is eligible. There are different kinds of networks that are created by insurance companies. Insurance companies create a network of hospitals where they offer cashless
Sure.
facilities. Now, in different insurance companies have different networks. Some of them are common, some of them are different. So an insurance company can decide that I want to have a network of say 10,000 hospitals where I will offer cashless facilities.
Okay.
Right? When you step into that hospital, you do not have to pay any of the costs by yourself and take a reimbursement later. You can actually take advantage of the cashless facility that the insurance company has with that hospital, submit it to a TPA desk, it's called a TPA desk in the hospital. You can submit the bill, you can submit your admission over there, and the moment that it happens, all the costs that are incurred at the hospital when you're incurring treatment is settled between the hospital and the insurance company directly, where you only have to sign out at the time of discharge. And that's cashless. And that is what most insurance companies would like you to do. But there is also an option to go to a hospital which may not be in the network, which your preferred hospital, which may not be, for some reason, may not be in the insurance company's network. And there you can go and avail reimbursement. So typically all medically registered hospitals are covered in health insurance. However, one important caveat in this whole statement is that certain hospitals sometimes are blacklisted by insurance companies. When I say blacklisted, what it means is some of these companies basically some companies for some reason may recognize a hospital as having committed a certain discrepancy in the or a fraud and may blacklist these hospitals and say that these hospitals are not covered within my network. Insurance companies have a right to do that, but they always have to inform the policyholder in advance that these are the hospitals that I do not have in my net. I will not settle claims from.
Very interesting. How do I find out as a customer whether the hospital that I am going to?
Correct. So all insurance companies, if they are blacklisting hospitals or have blacklisted hospitals, have to inform or ensure that communication has gone to their policyholders saying that these hospitals are not going to be covered under any circumstances, whether it's cashless or reimbursement. Sure. And it is a list that should be publicly available for any customer to see by that insurance company.
Sure.
So it is usually there on the insurance company's website. Usually a communication has also gone out in the form of an email, SMS or WhatsApp to the policyholders of this list. And also ideally it should go out at every renewal by the insurance company should be sending you a list in case they maintain such a list. Not all insurance companies maintain such a list, but in case they maintain such a list, they should be informing the policyholder.
Then final 2 points. Whenever I'm availing of medical insurance in case of hospitalization, is my entire expense paid by insurance company or are there some deductions?
It depends. It's a very good question, Shalin. It depends on your plan type that you've taken. So if you've taken a plan that covers for all payables, all non-payables expenses, it is the insurance company, the insurance policy will cover you for everything. and all conditions. However, many plans and majority of plans in the market do not cover certain expenses. Now, and this is why you should, when you're taking a health insurance policy or after you brought a health insurance policy, make it a point to read your policy document and coverage document. It is your responsibility to read it. Now, when you read it, it clearly tells you that usually there's a list in case an insurance company is not covering certain items or products. There is a list or an annexure that is given at the end of the policy document that states that these are the expenses in an hospital that will not be covered. So, for example, food bills, right? Attending, if there's an accompanying member alongside you, when you're going to the hospital. In case there is, if a hospital is charging you extra for registration and all that. These are typically some of the non-payable expenses in a hospital. Usually, this usually works out to somewhere around 5 to 10% of the total bill. That is the ideal situation where there are these certain expenses that are not covered by insurance and given in that.
There is a practical element to it. I mean, while I would encourage all our audience to go through that list, but if you and I here can try to simplify those, because eventually reading those lists is a pretty cumbersome task, and not everyone can make sense out of all those. This is just an effort to tell people what you might expect.
Correct. So, like I said, anything that treatment costs that are the major treatment costs, whether it's medicines, whether it is doctor fees, operation theater costs, your medicines that are pharmacy medicines that are incurred during the treatment, all of that will be covered in health insurance. Any reasonable health insurance plan should cover all of that, and it covers all of that.
In case you do require hospitalization out of your medical coverage, out of the total bill, how much should I tell my audience to keep aside to be paid from your pocket, irrespective of whether you have medical cover or not?
Yeah, so any fair or any fair hospital or any fair treatment type that you take should not extend beyond 10% of your total bill.
That's correct.
It should not extend beyond 10% of your total bill. And like I said, there are insurance plans in the country today that cover you for non-consumables. Ideally, although you may have to pay a slight higher premium for it, what it rest assures you is that when you go to the hospital, you don't have to worry about these 5-10% charges also. So you should take into consideration that. So if an insurance plan tells you that I'm covering you non-consumables also, it's a good plan to take.
Sure. Final point. You mentioned there is a TPA desk.
Yeah.
Brings us to the final point. Who are the different parties at various stages of selling or servicing insurance? Who am I dealing with? What is an insurance company? What is a TPA? What is a selling agent?
Okay. So the insurance company is your manufacturer of the health insurance policy. The insurance company is a person who is calculating the risk, determining what kind of product benefits and structures and everything that I should be giving in the particular policy, figuring out what is the portfolio, how it has performed in the last, has the data of claims, and is actually manufacturing the product, which is your health insurance product. That is the insurance company. The insurance company may have its own distribution that is owned by themselves, or may also rely on partnership-based distributions or agent-driven distributions. Most insurance companies, and all the major ones, anyone you take in India today, the majority of the distribution is actually an outsourced distribution. For example, they have insurance agents that are there, which is improperly called the agency channel. This is your agent that you recognize, the person who knows you, the person who you know from your dad's contact or somebody. It's the LIC agent, but it's not. LIC is a life insurance company, I know, but that's typically your agency level model. There's another very popular model which is bank assurance, which is the banks have become the big, large distributor of insurance. So this is the bank assurance channel, which is the bank selling insurance, where the bank is the main corporate agent.
So when a bank sells to me, when a bank relationship manager sells an insurance policy to me, in that case, the bank is acting as an agent of the insurance policy, right?
Yes, correct. The bank is acting as an agent of the insurance company. And that is one big one. And then there are these corporate agents and brokers, which are again something in terms of the agency-driven model itself, where it's a large corporate agent. A corporate agent being and has many people, his sales force, he has a sales force and all that, and the sales force is selling, but the corporate agent is there.
Sure.
And these are the outsourced channels, but one of the in-source channels, the insurance company also may have their own direct selling team. their own digital marketing team and their own direct selling team who is directly selling to you. Those are the people who are hired and on the rolls of the insurance company.
So while buying an insurance policy,
Yeah.
I approach one of the agents. It might be a corporate agent. It might be my father's friend who is an agent. It might be my bank, which is keeping my savings bank account.
Yes.
In that case, the bank or the agent will sell the insurance policy to me.
Correct.
Made by an insurance company.
Correct.
The major insurance companies being HDFC Ergo, ICICI Prudential, Bajaj.
Yeah, so there are three types of insurance companies in India. Life insurance companies that only do life insurance policies, general insurance companies that do all kinds of insurance other than life insurance. That includes health insurance, marine insurance, fire insurance, all those other kinds of insurance. And then there are standalone health insurance companies that only purely focus on health insurance. These are companies that do health insurance, accidental insurance, and travel insurance. So these are the three kinds of insurance companies that are there in India.
Sure. Now that I have bought the insurance policy, presumably from an agent, by submitting documents, by going through a medical test and all that, then someone called a TPA comes into the picture. Who's TPA?
So not every time does a TPA come into picture. TPAs are third-party providers. Now, what their job is that IRDA came up with this facility for TPAs where when they wanted to extend the benefit claim servicing piece, right? TPAs are ideally responsible for only your claim servicing, and not all insurance companies have TPAs. Some insurance companies choose to adjudicate their claims themselves in most cases. But certain insurance companies also depend on these TPAs. What TPAs do is they aggregate across hospitals and manage the processing of the claim document. So whether a cashless claim is coming in or a reimbursement claim is coming in, the TPA does the processing work of the particular claim. But the very important thing to understand is the final decision of the claim is still done by the insurance company, not the TPA. The TPA is responsible for smoothing the processing part. So their responsibility extends and is limited to only that part of the service. Because at the end of the day, see, the main important product that you're selling is an insurance policy, but the main role of an insurance policy is to settle claims. And the TPA is responsible for settling claims. So not all, like I said, not all insurance companies rely on TPAs. Some insurance companies only solely do it all themselves. Their retail insurance and all that. Say a company like ICICI Lombard, Care Health Insurance, Niva Bupa, all of these companies they have their in-house claim processing unit. They only rely on TPAs only for certain corporate partners. So suppose a certain corporate or a company says that I want to take group health insurance from so-and-so broker or so-and-so corporate agent, and I want my group health insurance to be serviced by this TPA. So in that case, the TPA will come into the picture.
So in case I bought a policy from an insurance company which does in-house claim settlement.
Correct.
And I go to a hospital which has a TPA desk on it. It does not have each individual insurance company's desk. Then would I need to deal with TPA? Would I need to deal with my insurance company?
A TPA desk is actually a nomenclature that is used in the industry, but actually the TPA desk belongs to the hospital. That TPA desk will deal with the insurance company also and TPAs also. So that TPA desk doesn't, just because it says TPA desk, it's just a name that just got caught on. But the TPA desk is the hospital's TPA desk, and that desk has access to both the insurance company's portal and also the TPA's portal.
And all TPAs. It's not just one particular TPA, because it's not one particular TPA's desk.
No, it's not one particular TPA's desk. It has access to all TPAs. Sure. It has access to most insurance companies. Whichever insurance company or TPA has tied up with the hospital, it will have access to that. So a TPA does not mean that you will go through a TPA only because it says TPA desk.
Jen, very quickly, if you can fill us in on where does Vital, your firm, fit into this value chain?
Yeah, okay. So Vital was formed with a pure reason that we figured that health insurance in India was a very passive product. What I mean by a passive product, it is a product that only works when you fall seriously ill, right? Now what happens when that happens is that people think that I may fall ill seriously once or twice in my entire life. So that causes people to say that maybe I don't want my product right now. I can delay my decision of taking the product. So what also that resulted in is people started thinking that the cost of premium, although less, was very high, because if I'm investing every year into a certain particular product and I'm not getting any return on it, if I'm not using it, the cost of the product becomes high for me. So we figured that why can't health plans go beyond just the health insurance part? So yes, our plans protect you against a very severe situation that could happen and you go to a hospital. But our plans go beyond that. What we try to also do is ensure that we give you product benefits and services in our health plan that you can use for your daily medical needs. Say you want to visit a doctor, you want to claim, do a health checkup, you want to order medicines, my plan will start working for you there. But more importantly, say your life stage or your health stage in life requires you for nutrition counseling, or requires you to join a fitness session, or requires you to, maybe people are under high stress and they require stress counselors. Based on your particular health condition and health life stage, I will also recommend in your plan itself, I will include benefits and services that you can use to stay healthy.
Sure, but just to understand, those benefits or those claims will be provided by an insurance company itself and not by your firm, right?
No. So we work with the insurance company. The insurance company being the primary one cornerstone, but the insurance part only covers the hospitalization part.
Sure.
All the other benefits and services we have curated and created, and this is all coming into one subscription plan, which is, again, not everybody needs the same thing. You may be completely healthy, you don't need a nutrition counselor. Somebody may be overweight, needs a nutrition counselor. Somebody may be suffering from high stress and requires access to a mental health counselor. Somebody may require a fitness pack, right? So depending on who needs what, the plan basically creates a subscription based on your health conditions. It creates that subscription plan, and what we've done is we made it monthly subscriptions. And when we make it monthly subscriptions, what we managed to do is we reduce the impact of that annual premium that somebody has to pay. And not only that, so this is for individuals. What we did is also then we said the SMEs, which is a big segment in India, which the small and medium enterprises, the smaller companies, the startups, the 15-member, 20-member, 25-member, 50-member companies. These guys also need to give benefits and services to their employees that are, at least more than just insurance, right? And we wanted to give them a plan that kind of worked for their employees in different ways. And this is what we did with that. We created a platform where it's easy for the SME to onboard and make a plan that's specifically suited for each of their employees.
Sure. Jain, this was indeed very enlightening. I hope our audience has understood a little better what a health insurance is and how to go about it.
Yeah.
Again,
thank you, Shalin. It was a pleasure out here.
Thank you, Jayan, for this insightful discussion. Moving on, our next session is a panel discussion on health insurance cover. How much should you spend? Let's welcome our esteemed speakers. Amit Chhabra, Business Head Health, PolicyBazaar.com. Sachin Mahajan, who's National Head, Health Insurance, Bajaj Allianz General Insurance. And Rohit Shah, Principal Officer, GYR Financial Planners.
Hello and welcome all. Welcome to the second session of the second edition of Manage Your Money, where we are discussing about health insurance. In the first session, we spoke to Jayan Matthews about ABCD of buying a health insurance cover. In this second session, we will talk about health insurance. Is it an avoidable expense or is it a wealth protector? Today, we have with us Rohit Shah. He's the Principal Officer of GYR Financial Planners. Amit Chhabra, he's Business Head Health, PolicyBazaar.com. And we have Sachin Mahajan, National Head Health Insurance at Bajaj Allianz General Insurance. Gentlemen, thank you so much for taking out time and thank you for joining us today.
Thanks, Shalin, for organizing this.
Rohit will begin with you. Very simply, health insurance, is it an avoidable expense or should it be in your portfolio? Will it actually protect your wealth?
Dan Sullivan from Strategic Coaching says that if you have money to solve a problem, you don't have a problem. So if you have a sizable wealth where you can assign a portion to take care of unforeseen health contingencies, then by definition, insurance is to meet those situations where your wealth is not enough. And for rest of us, we certainly need to have health insurance that kind of takes care of rising medical inflation. And, of course, it has to be layered between the various options for employees, between a corporate cover and an individual cover. But I would imagine that most of the upper middle class families, there is not really a choice that should we have a health insurance.
Rohit, I had not thought about going into figures so early in the session, but you mentioned sizable corpus. In this day and age, what do you think, based on your interaction with your customers, what is a sizable corpus one should be looking at?
Now, personal finance is highly personal, so it's really customized. But what we've observed with most upper, middle class families is that once your wealth is beyond 10 crores, I'm talking about the financial assets beyond 10 crores, it's very likely to be a surplus wealth. And generally, nothing much changes beyond that. What kind of food you eat, the clothes you wear, more or less remain the same. So if you're looking at, and we would normally, broadly, we could say that's a sizable wealth.
But probably what changes is what cars you buy after that, right?
That is before that.
Amit, why should one buy health insurance cover?
I think post-COVID, actually, it's something that probably does not need an answer, to be honest. Pre-COVID, a lot of people used to think that what is going to happen to me? I'm fit and fine. I eat healthy and all. What's going to happen to me? That's what a lot of people used to think. One. Second, in case something happens to me, it won't ever be a very large expense. So I'll manage from my own savings and stuff. That was a very, very common perception that a lot of people had. And just to add to that, I think the third point is a lot of people also used to think that I have one of these corporate policies from my employer, which let's say gives me a 2 lakh, 3 lakh cover. That's enough. I don't need a policy of my own. So I think these are three very common scenarios which a lot of people used to think, and they still think. But what COVID specifically has taught us is that one, hospitalization is it can happen to anybody. One. Second, if it happens, the expenses may be a few thousands. It could actually be in tens and twenties of lakhs also. And it does not take a very serious disease for a large bill to rack up. What we don't realize, and I think, and again, it's increasing now, but what we don't realize is that for anybody to be suddenly taking out 20 lakh rupees from your savings for your health is not easy. People don't have that kind of money handy. So I think that is why health insurance is absolutely essential, because that 10-20 lakh rupee bill could be coming your way any day, and you won't have time to prepare for it. So in such a scenario, that's what COVID has taught us, because COVID has caught the young healthy, it has caught the entire families. People have been hospitalized for 2-3 weeks at a go. So I think to save yourself from that emergency and financial loss because of hospitalization, I think it is almost now mandatory that everybody must have adequate health insurance. Otherwise, you're up for a very large risk, which will catch up with you at some point in your life.
The risk here being risk to the wealth, because otherwise healthcare risk is there in healthcare exigencies and each way.
Exactly. And see, honestly, people don't realize it right now, but when you are at a hospital and your loved one is, needs to be treated, at that point of time, money doesn't matter, right? You'll be willing to sell off your property or jewelry, your car or something to get the money. That's something that people do, right? In India, still about 60% of all hospitalizations are still out of pocket. They're not through insurance. Which when you compare to, let's say, a US or a UK or any large country, it's less than 1% over there. So and people, in that desperation at that point, will have to, go to desperate measures, take a loan or sell off something. When you can get health insurance, which is so much more cheaper and affordable, why would you not do that? That's the question. I think it's just either lack of awareness or laziness, which leads us to not do it. But right now, I think it is very, very mandatory that everybody has health insurance.
But that is the question: how affordable or how cheap it is. We'll come to that question. Sachin, how many people in India do actually think that way, that I need to spend a certain amount of premium to be able to save my wealth from an exigency? Being in insurance industry, what have you seen the trends over the last few years and over the last a longer period of time? How has that trend changed?
Okay, a very good question, Shalin. What have we observed? That health insurance was always taken as a product which can be taken later, can be postponed. I can afford to ignore it, neglect it. And I always give an example that health insurance was treated as like in your thali, it's like a pickle. Okay, you may have it or you may not have it, doesn't make any difference. It's not like that. It's less salt basically. If the salt is not there in your food, you don't enjoy the food at all. So that is the importance of health insurance. And as Amit rightly said, due to pandemic, COVID, A lot of people opened their eyes. They understood that it is extremely important. But still, I'll tell you one thing, it's very surprising and unfortunate that still people need a nudge push to buy health insurance. That is a sad part of it, because we have seen every family, in fact, neighbors, friends, our own family, nearest family members have succumbed to hospitalization due to COVID or huge expenses. I have seen claims worth around 70 lakhs also in COVID, one person. That has happened. Still, people are hesitant and people are waiting for the best thing to come. Compare, I'll get back to you. I don't have money. Those questions, those objections still come. That's very surprising. But the awareness is increasing tremendously. And it is everywhere. Health insurance is in huge demand. But surprisingly, it is still a product where people don't buy proactively. They need a nudge and push, pressure, then they buy it. And still a lot of people do it for taxation, surprisingly.
How much is the penetration of health insurance coverage in India?
Could be around 8%.
And,
I'll tell you one more thing. It is also from government, provided by government or provided by employer. It is not taken individually. That's the biggest sad story, because whatever people are covered by organizations or government, that is given as a gift. Okay. And employer may withdraw it. Employer may reduce it. Employer may stop it completely and tell them to just take 10,000 rupees and buy your own Mediclaim. So your own cover is extremely important.
Rohit, will come to you. What is it that one should look for when buying a health insurance cover?
No, there's so many aspects which one has to think through, and it's part of the overall insurance strategy. So if you are employed and you already have a company insurance, then how does your own insurance fit into the overall scheme of things? So for example, are you just going to take a top-up insurance to support the employer insurance which is there? You have to also, one has to also think about the medical situation, look at the history in the family, look at what kind of possibilities which are there. One has to also think of the location, whether you are in a metro, whether you are in a tier 1 town. One is to also look at in terms of the, how one prefers to be treated in a medical situation. So for example, I would need to look around the good hospitals around and look for which are the insurance companies which are empaneled with them. One should also look at affordability and a cost point of view. What's my budget? How much money I can afford to spend as a part of my overall budgeting, personal finance, and an insurance cost. Then, once one has down selected, that okay, I'm going to probably look at a 15 or a 20 or a 25 lakh health cover on my own. Then really the question starts about whether I'm going to look at private sector standalone health insurance. I'm going to look at a private sector general insurance, general insurer also giving health insurance, or I'm going to stick to a nationalized health insurance. What kind of features I'm going to look at? As an example, someone like someone like the New India may not be very great with a lot of features. And if I have a need to stay with a PSU kind of assured kind of then I have to compromise with that. And if I'm going to look at the latest good product, good features, then I might have to look at some of these companies giving you wallets, giving you dual double bonuses. So then I need to look at the features. Claim settlement ratios. I feel this matrix is kind of overhyped in India. First of all, the not very reliable data is available. If you look at the IRDAI insurance report, it is probably available for the March 2021, and then very, very unfriendly, very difficult to kind of understand this data as a retail investor yourself. But I feel more important is kind of a premium incurred ratio, which is like how much money that insurance company is received as a premium and how much is being paid out as a claim. And then, in India specific, you don't really have a lot of data points in terms of, let's say, how the top-ups and the super top-ups have really performed in terms of actual claim settlement. So within the limited data point that one has available, one should really think through about what the proposal is. The great news is a lot of new age insurance companies, a lot of portals, a lot of health insurance focused websites giving you information. To summarize, externally, what one has to look at is to what kind of product, would fit my need, what kind of company, what kind of features. Internally, one has to look at what are my needs, what is my budget, what kind of preferences I have, and then kind of down select a product.
Sure. We'll talk more about that. Sachin, before that, Rohit made a very interesting point that new age insurance companies are offering a lot of data points and a lot of information to the customers to help make them a decision. Your take on that?
Okay, what Mr. Rohit says is right, but I slightly differ here. I think more important than features and benefits is the company's credentials are very important. How stable that company is.
The insurance company you're talking about, or
I'm talking insurance company.
Sure.
I'm talking about the intermediary also. His reputation is extremely important because intermediary today take a code, do some business, stop it, ignore it. At the time of claims, how available he is he available anytime, call up, then support and education. What is important in the Mediclaim in health insurance, basically what is not paid, what is the co-payment, what are the sublimits, everything should be told upfront rather than hiding. General exclusion, everything should be explained and then only a check should be taken. Because the features and benefit will have never end, it will be continuously evolving, ever evolving, best of the benefits will be given. But at the end of the day, I always say what people use, what people know, what people remember. People remember about Mediclaim is what is covered, sickness, illness, hospitalization due to accidents, surgeries, that should be paid seamlessly. Not much of a deductible. Deductible has to be justifiable. Not much of a delay in reimbursement, and availability of network hospital and a reputation of that particular company. I think that's extremely important.
What is saying essentially commoditizes your business itself. If every customer would think like that, then what is the innovation that insurance companies have to offer?
I didn't understand. What did you say?
You're saying that customers must look at these basic things. What are the coverage areas? What are deductibles? But then, if that's the case, then the insurance policies would become kind of a commodity. There would not be much innovation in the
No. Please don't get me wrong. I'm not here saying that this is wrong, that features should not be there and they should be ignored.
Okay.
And they're only ornamental benefit. I'm not saying that at all. I am saying everything is essential. In fact, people are evolving with that double bonus, restoration, reinstatement. Everything is fantastic. Room rent, no capping. But at the end of the day, it's very important because see, problem is what agents talks today is bought by customers. He doesn't read. The problem is every customer when some claim issue comes and complain, that customer complains. I always ask simple question to him: have you read policy wording anytime? Have you referred to it? Have you checked the conditions? Because it's very important. We don't go through the conditions at all. And then it is shown that co-payment was there, sublimits were there, waiting period was there, this exclusion was there. Customer is not aware about it. What I'm trying to say, this is extremely important. Features are extremely important, benefits are important. But at the time of claim, what gets stuck up is the waiting period, exclusion, co-payment, sublimit, room rent. So if that is not explained, then the customer is in for a shock. And who is to be blamed again? See, intermediary will do his own job in a fantastic manner, better manner. But don't you think it's customer's job also to just check the document? Because I'm basically covered for 5 lakh, 10 lakh, 20 lakh, or maybe 1 crore. But I don't know the conditions. What are the waiting period? What are the exclusion? That's important, I think. So it's my duty also.
Sure.
It goes hand in hand. We cannot say that I paid the premium. Company has to pay everything. That is my job to get educated also.
Amit, how are portals such as yourself or other sellers solving this problem where they can give more and more relevant information to the customers at the time of buying the policy, making them more aware of what is it that they are buying?
See, health insurance, honestly, is a complex subject. And it's a legal, it's practically a legal agreement that a customer is getting into with an insurance company. And there's a lot of language which is difficult for customers to understand. Like, for example, I'll give you a simple analogy, right? Now there is a term called restoration, which is there in most products in some shape or form. Some companies call it restoration, some call it recharge, some call it refill, some call it something else. There are 10 names by which that same term goes. Within that, now everything's in black and white, right? It's written on a document. But within that, there are so many clauses that if you really ask me, I don't think it's possible for a layman to actually understand what they have bought in full detail. That's where I think, as Sachin was saying, I think that's where intermediaries like us become important, because it's our role to actually educate the customers and make them understand what they've bought. Because if somebody is a layman is reading a document, the policy document, which is typically 50-60 pages, it is very difficult for them to know what they've exactly bought. So
how exactly are you doing that?
See, one, it's about when you are selling, you communicate well. So the way we communicate on the website, the way we communicate on calls with customers, I think that is very, very important. That's part one of it. I think the second part is, once the customer has bought, getting that reaffirmation from the customer that, sir or ma'am, this is exactly what you have bought.
Right.
These are the features, these are the benefits. Are you sure you know about it? I think that is also very, very important. So what we do, for example, as Policy Bazaar, we have a maker-checker process in place where once a policy is bought from us, there is somebody from a different team, some completely new guy, he or she would call up the customer again and say that, sir, you bought this policy from us. We just wanted to confirm that you know all the details. So you should know what is the room rent limit, what is the restoration benefit, what is the no claim bonus, etc., etc. That's part one. The other part, which is also very important and which leads to a lot of grievances later on, is in case a customer does not declare medical conditions. So what happens a lot of times is, there are you might get misguided by an agent formally, or either it will be on intent or could be just by chance. What might happen is, you might miss out on declaring some of your pre-existing conditions. Like, let's say if I have let's say hypertension. Somebody might come and tell me that that your hypertension is very minor, you cannot disclose it, it's okay. Or somebody might say that if you disclose this, then you may not get the policy, just don't disclose it, it's okay, we'll see later. The problem is, you're entering into a legal contract with the insurance company, and at the time of claim, the insurance company has all the right to deny the claim in case you have not disclosed. As Sachin was saying, right, customers expect that I have paid the premium, now the claim has to be paid. But then you have paid the premium for a legal agreement. If you go outside the bounds of the legal agreement, then obviously the insurance company is not liable to pay. So I think getting that validation from the customer is also very important. That, sir, this is what you have declared. Is this correct or not, or you've missed out on anything or not? These are some of the things that, as Policy Bazaar, as an intermediary, we do to ensure that a customer who buys an insurance policy, claim for them is never a concern, and they know what they've got.
I'll just pick your brain for 30 more seconds there. In this particular claim, aren't more healthcare policies given after a medical checkup? And if so, then wouldn't the medical checkup throw up some of these things that the conditions are there?
No. So two things. One, now most policies are given most health insurance policies are given without a physical medical checkup. Typically, less than 1 to 2% of cases go into a physical checkup.
Okay.
Rest everything goes through a process called Tele Underwriting. So about half of the business is straight through. The customer just instantly gets a policy based on the declaration. In the rest half, there is a tele process where a doctor from the insurance company calls up the customer, understands the medical conditions, and then the policy is issued. In less than 1 to 2% of the cases is the physical checkup actually needed. But please understand, a physical checkup may not give you all the details also.
Understood.
Right? So if somebody has cancer, let's say some cancer which is not directly visible, or it does not come out through blood tests and all, then there's no way to know.
Sure.
Right? But a claim can be rejected if you don't disclose cancer, or something very minor also for that matter.
Sure.
Hence disclosing right is very, very important.
Sure. Amit will take the conversation forward with you itself. As a seller of insurance policies, aggregator of various companies' policies, what are the trends that you've seen in the offerings of these insurance policies over the last few years, and the preferences of customers? What are the features that customers are buying more in terms of the coverage, first of all, and then in terms of the convenience features as well? First of all, let's talk about coverage. What kind of coverage are customers buying more?
Yeah, so Shalin, increasingly what you've started to now see is that more and more customers are buying high sum insured policies. When I say high sum insured, I'm referring to sum insured of 20 lakhs and above.
Okay.
Historically, this number used to be very, very low. Again, less than 5% people used to buy high sum insured policies. Now that number has gone up significantly, and now almost 30 to 40% of customers at least we sell insurance to, they buy high sum insured policies. The reason for that is, I think, as awareness is increasing, more and more people are now realizing that for my family I need higher coverage because the large claim is a reality. It can actually happen. That's part one. The other reason why it's become a reality is also because there has been a lot of new product innovation from the insurance companies as well. So there are now products which are available at a much cheaper cost, which offer high sum insured policies, which was earlier not the case. Like a case in point is Bajaj Allianz has a product called Infinity, which actually gives you infinite sum insured. So it says that you choose a room rent and you get infinite sum insured for that room. And there are similar other products from other companies as well. So I think innovation plus more awareness is leading to one high sum insured policies. That's point one. Now to answer your other question, I think what has also happened is that with COVID, there are two very clear trends that we are seeing. One is that people are now looking to buy policies which also cover for hospitalization at home. Because earlier, in our craziest of dreams, nobody would have ever thought that there will be a time when hospital beds will be full and one will have to get treated at home. Nobody ever thought of it. And
Right.
it wasn't there in insurance policies. The customer never asked for it. It wasn't ever there. There was actually a concept called domiciliary hospitalization always there in insurance policies, but it was one of those points which customers never cared about. However, now that's a reality. So what we're now seeing is customers are specifically asking for policies which cover for hospitalization at home, which basically means that I need to be hospitalized, but hospital beds are full, so I'll get treated at home and insurance will cover for it. That is one example. Another very relevant example is cost of consumable items. So consumable items are basically items which get used up during the treatment of in a hospital. These could include things like masks, syringes, gloves, PPE kits. Traditionally, they used to be about 2 to 3% of the total bill amount. So again, nobody really cared about them. Customers would typically expect that 2-3% I'll pay from my pocket because insurance doesn't cover for it.
Okay.
With COVID, this now become 20% of the bill because there are no protocols to be followed in hospitals.
Yes.
Now 20% is a very large amount. So if there is a 5 lakh bill, you're talking about a lakh rupee. Now that lakh rupee, customers don't want to obviously pay from their pocket. So now again, one of the demands from customers have been that I want a policy which covers for consumable items.
Sure.
And that is again something we are now seeing, coming up from a lot of insurers. So there are now optional riders available with a lot of products where you can opt by paying a small premium amount, you can opt for them. And what you get is coverage for consumable items along with that. So that's also something that's become very, very prominent. And then I'll just say another third thing here, which is now becoming, it's a customer demand as well as driven by insurers offering it, is products which offer coverage for pre-existing diseases from day one itself. So traditionally, if you have a pre-existing disease like let's say diabetes or hypertension or asthma or something, traditionally they would be covered after 3 or 4 years of buying a policy. What has now started to happen is that there are now products, and they're expensive products because obviously you have to price for it if you're covering earlier. But there are now products which offer coverage from day one itself. So that is also now becoming a reality where, from day one itself, a pre-existing disease is also covered. And it can cover for OPD and IPD both, which means outpatient and inpatient both. But those options are becoming available. So I think the ambit of health insurance is becoming a lot more wider. And for a customer, obviously it's good because the whole intent is eventually you want that any expense that you have to do on healthcare, your insurance covers for it. So I think slowly, but very, very surely we are getting there.
Rohit, this brings us to you. As Amit said that there are so many things to cover in a insurance policy when buying an insurance policy. But all those things, as you keep adding to your insurance policies, those add your premium outgo. Am I right there?
Right.
How should a customer decide how much to spend on paying a medical insurance premium, and what all do I really need to cover myself against?
See, one is we have to see this from a budgeting point of view, and as financial planners, normally we recommend a framework like what in my firm we call it as a 30-10 framework, and this 30-10 framework is if your take-home income is 100 rupee in a year, you should at least save 30 rupees or more. You can have EMI or rental of about up to 30 rupees. all your traveling, food, groceries, education expenses for children can be about 30 rupees. And the 10 rupee is your risk management budget. Now, the risk management includes insurance, it includes emergency corpus, contingencies, unplanned expenses. So, when it comes to health insurance, I would look at this bucket, which includes life insurance, which includes your car insurance budget, and one should ideally look at within this 10%. Now, the second part of your question is, I'm planning to buy a policy, and which are the features I should really kind of prioritize. And I think this is where Sachin made an interesting point that more importantly, the focus should be on the coverage, exclusions. As a customer, I must understand that what I'm really buying into. But I think the primary focus should be into the basic health insurance product, understanding the exclusions and understanding the waiting period, the pre-existing leases. I think a lot of standardization is happening with the work that IRDA is doing, but we are still away from that. Now, when it comes to these great features, I think that's where one needs to take a very kind of a careful call. It's very complex. It's complex even for advisors. The way a lot of new products keep coming in and they kind of keep upping the game. I would look at one, a retail investor trying to make sure that at least at the base level, the core cover is available. Second, trying to match between my need and these great features in terms of what is getting additionally covered. And I think the mindset is at work here. So for example, I can have a policy which kind of says that the cancer care policy, and the benefit of having a separate cancer care policy is I don't have to disturb the health policy. But the problem with this is there is no end to this. There can be a super topper policy for the cancer policy, so you don't have to disturb your main cancer policy, and you use the super topper policy. So there is no limit to what to the innovation, to features. The
Sure.
basic is good enough.
So in that case, could you give us a priority list? If I have to buy, there is a limited premium that I can pay. Okay, let's make a priority list from the top. This is the first thing that I have to look at. This is second thing, third thing, fourth thing. Can you give us a list?
See, the challenge here, Shalin, is this is a customized answer. So it's difficult to kind of generalize this. But I would slightly recommend here a parlance to investing world. And this is the same problem the investing world investors face in the journey where do I do direct equity, do I do actively managed fund, do I do passive funds? And if you look at John Boogle's way of propagating a passive world, he says that you're basically going by the collective wisdom of everybody in the market.
Yes.
So one of the way to solve this problem is look at the popular product, look at established product, the one which have got a decent review and which has a large number of policies sold, which basically mean that you're not doing something really different. So that's one way to look at it. Second way to look at it is that really understand these features, use some of these portals, which have a lot of these information available for you to kind of debrief. Okay, this is how a kind of a wallet can help. This is how a recharge feature can help. This is how I can save money with Consumable. This is how I can save money with the reimbursement of medical expenses, and it can possibly reduce my cost. I think this is information. The other way to do that is actually work with an intermediary. And just as a disclosure, we are not an insurance intermediary. Since we do an RIA model, we really don't get into execution ourselves. But preferably one of the way to make this challenge easier for a consumer or an insurance buyer is to work with somebody who is an expert who does this day in and day out and get some help to understand these features.
Sure. Sachin, now we come to premiums. How much does it cost to buy an insurance policy? If I have to buy a 10 lakh cover, if I have to buy a 20 lakh cover, or as Amit said that 20 lakh and upwards is now the new trend, how much will it cost me?
See, this question again, it cannot be answered like this because it is again age specific, location specific, Okay, family size specific. Again, pre-existing if there are there, some loading is there. Okay, I'll tell you one thing. The premiums are not much at all because the premium basically covers you for 100 times of cover. 100 times. Okay, so it's very important that the premiums are very less. I'll add to Mr. Rohit's point how to select. I'm saying, as you said, some thumb rule. I think thumb rule should be basic sum insurance, adequate enough as per my standard, as per the where I stay, my family, this thing requirements, my income, the pre-existing diseases my family is having, the history of my family, health history of my family, whatever happened to my uncle, my father, forefathers. So due to that, I may get admitted, due to maybe heart problem or cancer or whatever. And what could be the cost today's world, or 5 years down the line, 10 years down the line, as per that the sum insurance should be chosen. Second is bonus, how much bonus is added every year. Third is room rent capping. Okay, these are very important. And if you want to make it a very economical, it could be again a basic product of 5 lakh and a top up of 20 lakh or 50 lakhs. Okay, or 10 lakh basic, top up could be 90 lakhs. So it will fit in a very small budget, covering fantastic, comprehensive, and a very, very small premium. Okay, now about your premium question, I think premium is still, I may use this word, negligible. Premiums are really negligible. Okay, because the benefits are fantastic. Now, COVID has proven one more thing. A lot of people used to think that health insurance premium gets vested. Now, today, COVID has proven that claims are paid after 15 days. COVID claims. Okay, there is 30-day waiting period actually for sickness, illness, diseases. Okay, but for COVID, 15 days after it is covered. And COVID, that second wave was so dangerous. A lot of people in the family, they have suffered. So if you get take a premium, pay a premium of 10, 15, 20,000 rupees, and something, God forbidden, something goes wrong in 16th day, 17th day to any of your family member, don't you think you are covering manifold, you are going to get the money back? So I think very pertinent thing is, instead of going into a lot of comparison and so many 100 things, because a lot of companies are offering this, lot of features, lot of product.
Definitely.
Instead of that, buying a product immediately is very important. Abhit also will agree to me that policyholder people go to people, keep on comparing and they don't bite. They keep on comparing. And in the midst period, that 15 days or 7 days period, some accident happens. I'm not saying big thing, maybe 20,000 rupees accidentally. He pays through the nose to the hospital.
Sure.
Why? Because he wanted to save some 2,000 rupees.
Sure.
I think urgency is extremely important.
I think we have already covered that it is indeed helpful to buy insurance cover. I'm just trying to get a sense of, and I do agree that the answer varies a lot, but still, if you can give us some sense of how much will it eventually cost me?
As I told you, as per the age, if the age is less, it could be 10,000, 15,000 rupees for 5 lakh, 10 lakh.
For 5 lakh or 10 lakh?
Yeah, 5 lakh. See, again, age, no?
Mm-hmm.
If the age is 25 or something, 10 lakh also can be bought in 10, 15,000 rupees.
Okay.
If you buy again a top-up combination, basic and top-up, it may cost you 20,000 rupees, 1 crore cover.
What's the top-up and how does it work?
See, there are two kinds of top-up. One is a basic top-up, where every claim, there is a deductible. For example, 2 lakh deductible. So if there is a claim of 5 lakh, 2 lakh deductible in every claim. First claim comes of 3 lakh, 2 lakh is deducted, only 1 lakh is paid. Second claims come 5 lakh rupees, again 2 lakh deductible, 3 lakh is paid. That is a normal top-up. Second is aggregate top-up, that is called super top-up. In that policy, all earlier claims paid by this company or the other company, even if the employer has covered, the remaining amount is paid by the company directly. Okay, that deduction is applicable not on every claim, aggregate. So these are two kinds of top-up. So the second aggregate cover, super top-up, is the in thing today, and people go for that because instead of deducting in every claim, it's better to have an aggregate deductible, and the premiums are very, very economical.
Sure. So it would make sense to go for a kind of an aggregate or super top-up because that would keep your premiums low, but still offer you a higher coverage.
Absolutely.
And Sachin, how have the premiums, the trend in the premiums been in the last couple of years? Have the premiums increased in insurance policies?
Yes, premiums are increasing, and it all depends again on the medical inflation. Okay, COVID was one of the things, but again, first wave, second wave, third wave. Okay, people are expecting fourth wave also. So if it may happen, then the cost is very high because that was never predicted, that was never thought about. So the premiums are increasing, and obviously so. What I'm trying to say again, if people, it's a difficult task, but if people behave as if they are not insured, they behave, even if they are insured, but they behave as if they are not insured, they go to hospital which is affordable to them, then the claim cost will be always be in control. But seldom it happens. We don't look into hospital a lot of time. We go to higher hospitals because we have got Mediclaim cover, 5 lakh, 10 lakh, 20 lakh, and the cost unnecessarily shoots up. Getting me? You go to higher rooms, the every cost, completely proportionately it increases. So it's very important for me to understand, if I am not having any insurance, I go to a hospital where I pay maybe 3,000 rupees room rent or 4,000 rupees, but I have Mediclaim and there's unlimited room rent. So I go to a room rent where 10,000 rupees room rent. So unnecessarily the cost is adding. So it's very important for you to understand that Mediclaim is for emergency, for extremely critical situation. It is not for a small claim. You go to bigger hospital and make huge claims. If that can be controlled, which is a difficult task, and hospitals are not regulated today. There is no standardization hospitals. Yes. So standardization every company is demanding today. There are two demands actually: hospital standardization and GST of 18%. That is a demand. So if GST is reduced to 5%, because 18% on health insurance premium is very high, and unnecessarily that is becoming unaffordable. So if it comes to 5% GST, hospitals are regularized, I think maximum problems will be resolved, and people will best of the service also. And at the time of their problem, they will not be struggling today.
First, we'll move the conversation forward. A very common query of all the users is they have their medical cover from their employer. Now, Rohit, why do we need a separate insurance cover for which the premium has to be paid from my own pocket if my employer is already offering me a medical cover?
Sure. I think Sachin referred to this in the beginning, and we would very strongly recommend to have a personal cover. And the whole idea is that, one should have a very, very independent control of this aspect of the personal finance, which can be a very huge drain. And I think the reasons are, what I think Sachin had also pointed out. One is that the employer cover may not be enough. I would say the average cover that I see with most employer would be around 5-7 lakhs. So that is certainly not an enough cover to have. Second is that the employer budgets can change anytime. Third is you could move across the employment, and there is a lot of trend about working with startups nowadays. The startup may not even have a cover. Four is, a family can relocate. And, once you relocate, let's say abroad, you are covered, and then your family in India could kind of result in an issue. The transition period is also a challenge. So, your flexibility to manage, your insurance needs is much higher when you have a cover on your own. One of the very important change which COVID has brought in, which we need to keep in mind, is that like a family floater concept or an insurance as a need concept made an assumption that all of us getting hospitalized together at the same time is a very low probability. Now this has completely changed with COVID. So this is another reason that we should not depend upon the employer cover itself.
But in case yes, please.
May I add to this?
Please.
Very sorry to interrupt.
No, please.
You see, it's what is more important. A lot of people are under the impression that I am covered and I'm going to stay in this company up to my retirement. After retirement, I'll buy. They assume that all the insurance companies' doors are open for everybody. It is not that way. Okay, if you develop some particular disease in that particular period, all the companies' doors could be closed for you forever, lifetime. So it's very important when you're healthy, you should have your own cover. And you should use it because one more aspect which is being ignored, ATD benefit, income tax ATD benefit. It is ignored by a lot of people, and that is untapped. If you say ATC today, life insurance premium, PPF, and infrastructure bond, everywhere you are covering that ATC or home loans. But ATD cover, people can get benefit of 25,000 for nuclear family, 25,000 for my family, and 50,000 for my elderly parents above 60 years of age. Okay, so up to 75,000. If I'm also senior citizen, my parents are 80, 85, I can get 1 lakh rupees worth ATD benefit. That is being ignored. So if I take that cover, my ATD cover is also individual cover. 80D benefit also I get. So that taxation is 20-30% I'm saving on that amount, and that Mediclaim can be kept aside, not touched at all. No claims are made in the individual policy, and you make all the claim in your corporate policy. So your policy becomes completely claim free. So whenever you claim in that policy, the claims will be seamlessly paid. It is untouched, and the cumulative bonus keeps on adding. So it's extremely important that you have to have your own cover. You cannot be dependent on the corporate cover.
The calculation a customer would do is that, okay, maybe I've got another 10 years to stay with the company. If I keep paying premiums for those 10 years out of my own pocket, why not take a higher premium policy after 10 years? I would save all this money through my 10 years, but then pay higher premium there. So how does one reconcile that?
No, it doesn't. That's what I'm saying. The thing is your hand. Accidents are not in your hand. Any disease is not in your hand. So what will happen after 10 years, you don't know. And most important, people, when they change the job, in the gestation period, the notice period, okay, they are not covered. They leave the job, and after 1 month, they are joining other job. And in that window period, something goes wrong, nothing is paid, something is diagnosed. That may be completely, the claim will be rejected, complete case will be rejected. No company will give you the policy, or the policy will be given with loading or exclusion for next 4 years, pre-existing. So that's the biggest risk we are taking. What we are saving actually is very small amount. What we are risking is a huge thing. That's why it cannot be taken so casually. Okay.
Amit, we'll come to you. There are we spoke about the kinds of coverage that we have, the kind of top-ups that we have. Now, can we talk about other kind of top-ups which are not directly related to coverage, but rather about convenience or the features that help getting policy faster or add certain convenience factors to your policies? What are those kind of features that policies are offering nowadays?
All right. See, so I think obviously super top-up is one very popular way of increasing your sum insured. Apart from that, I think another one which is very popular right now is and it's called by different names by different companies, but essentially it offers 2-3 benefits to the customer. One, as we spoke about some time back, was coverage for consumable items. So these are PP kits, gloves, and all. By paying a marginal amount, you get coverage for those in your health insurance policy. That's one. The other thing which comes as a part is inflation protection. Now, what does that mean? See, inflation is happening, at a rate, let's say 6-7% in India, and probably medical inflation is even higher. It's probably 10 to 12%. So you are sum insured, let's say if it's 5 lakhs today or 10 lakhs today, and after 5 years also if it's 10 lakhs, then obviously the effective value comes down because there is inflation. So in such a scenario, what these policies offer is something called inflation protection, where whatever is the CPI inflation that's declared by the Ministry of Finance, yes, or the regulatory body, that by that amount the sum insured automatically increases. So a customer does not have to pay extra. They don't have to increase the sum insured. It automatically increases by that percentage every year, lifelong. So let's say if the CPI inflation is 4%, then every year the sum insured will increase by 4%. So over a long term, the customer accumulates extra sum insured, which comes in handy for them, at a later stage. So their policy sort of almost keeps up with the times.
And of course, the premium for this is higher than the regular policy coverage premium.
You have to pay a premium for the rider. It's typically not a very large amount, but the sum insured will then automatically start to increase every year.
Rohit, is it worth it to pay a rider for inflation protection?
Yeah, sure. It could make sense based on the applicability and what kind of budget one looks at it. But in principle, I don't see a problem with paying for such riders.
I think Sachin, this also takes care of what we were talking about in pre-interview, that while you may buy 20 lakh rupees cover today, but if you intend to carry that policy for another 10-20 years, then 10 or 20 years hence, that 20 lakh cover might not be much. So does this inflation protection take care of that thing, or should you look at even further top-ups in your medical policy?
See, inflation protection is a very good rider. In fact, okay, that's an innovation. What I'm trying to say, our salary increases, business income increases, and we keep the same cover. I think that should be looked into every year. And every year the sum insured should be increased as per, because see, our standard increases. We take a higher car, we upgrade to higher, better mobiles, better houses.
Yes.
So why not go for a Mediclaim also? Every year sum insured is increased.
Does the insurance policy allow that?
Yeah. Yes, sir. What did you say?
Does the insurance policy allow that?
Absolutely. Why not? Why not? The sum insured can be enhanced. Second thing is that in every house, there are actually, I always say there are 7 covers person should have. 7. Okay. So one is for my family. Okay. In nuclear family cover. For my parents cover. For my in-laws cover. Critical illness cover for myself. Personal accident insurance for myself. Hospital cash is important. Okay. So there are so many things. Okay. So what is important is that what is people's need today? People's need today is, if I consider myself to be very healthy, my biggest fear today is my, my parents' hospitalization and my in-laws' hospitalization. So it's very important that they are also covered, and that should be first priority. Parents, in-laws, then myself, my nuclear family. And what is ignored, is personal accident insurance. Extremely important. Personal accident insurance, I always say it should be at least 200 times of your monthly income. For example, my income is 1 lakh. You should have at least 2 crore rupees personal accident insurance, because if something goes wrong, okay, that financial loss will never be sufficed. That can never be taken care of. And unfortunately, people go for life insurance predominantly in policies where they get the money back. It's not a term insurance. Pure term insurance people don't go for. So if you have a personal accident insurance, how much premium you pay for 1 crore? Do you know, Mr. Shalin?
No, I don't.
Premium for 1 crore is only 7,000 rupees yearly.
For term insurance, yes.
Yearly. Okay.
Yes. Yes.
So it is fantastic. Not term insurance, personal accident insurance.
Oh,
term
okay.
insurance could be 20,000-25,000 rupees.
Mm-hmm.
So it is so less that you have to have that personal accident insurance. Second is critical illness. It's very important, because in critical illness, our normal health insurance covers it. But health insurance gives indemnity. Whatever you spend on that treatment, you get it back. But critical illness gives you lump sum amount, 2 lakh, 3 lakh, 5 lakh, 10 lakh, 20 lakhs. If the critical illness is just diagnosed, on the diagnosis it is given. So it is extremely important.
And these two are the riders on health insurance policy, or are these the riders on life insurance side?
No, the critical illness is a separate cover actually, because it is encompassing a lot of critical illnesses.
Offered by health insurance or life insurance?
Health insurance. And life insurance also has this. Life insurance offers like rider also. But as we are talking health insurance here, I always urge that the person should have a critical illness cover, personal accident insurance cover of at least 1 to 2 crore. At least I'm saying it could be 10 crore, 20 crore also. So these are extremely important things which should not be forgotten. It has to be actually, you should keep on adding, as you take a mobile and you keep on adding apps, yes. Keep on adding insurance, because anything could happen anytime and your insurance should not have any gap. Everything should be taken care of.
Sachin, the 7 covers that you're mentioning will eat completely into the 10% budget of Rohit that he said about contingencies.
At the time of claim, it will save you a lot of troubles. Lot of money which is saved for retirement or for child marriage, education, that money will be saved.
We are coming towards approaching the top of 1 hour. We'll quickly move to some of the questions that we regularly receive from the audience. We'll go through these questions very quickly if we can. People ask claims, what to expect and how to avoid any negative surprises during making claims of rejection. Sachin, will begin with you in that.
Okay, you meant to say your question is what sort of surprises should be avoided when you make a claim?
In the claims, yes.
See, most important is waiting periods. If you don't know the waiting period, okay, for example, sickness, there's a waiting period of 30 days. Okay, you make a claim and you take a calendar year of 1 month. It is not that way, because calendar year could be 28 days, February. So you make claim after 28 days, it is rejected because there is a 30 days waiting period. Okay. Then exclusion, deductible. Okay. General exclusions, for example, drunk and drive or liver cirrhosis, those claims are not paid. Okay. Cosmetic treatment claims are not paid. So if you claim like that, then you are in for a shock. Second thing is that your policy is having 2-year exclusion, that hernia, cataract, joint replacement, knee replacement, these things are having 2-year exclusion. If you're not aware about this, you make a claim, the claim gets rejected. So it's very important that you have to have a reliable intermediary and you have to have a discussion with him. And Mediclaim should not be taken casually that you are buying one of the stock or one of the product or one of the mutual fund, because it is a long-term thing. It is not one time. It is long-term. It is lifetime cover. So if you make a mistake here at the time of claim, the claim is rejected. A lot of people stop renewing Mediclaim. They completely lapse it. Why? Because the experience was bad. But you should introspect and check whether the experience was bad because I was ignorant, I was casual about it,
Sure.
I should have done proper study and then taken it. But again, study does not mean comparison for 15 days, 20 days. Study means whatever you want to do, study it completely and buy it immediately. Because the next day also you can put it out if you're not happy.
Sure.
But it's very important, decision should be quick.
Amit, very quickly, what are the things that people suddenly find out while making claims, while claiming the money, and which you would want to make people aware of right now?
Sure. I think two things. One, you must know the room rent that's allowed in your policy. I think that is one very important thing, because what ends up happening is people go to an expensive room and then they later realize that my policy only covers for half of the room rent.
Right.
The problem is it's not just the room rent. Everything else, also everything else, including the doctor's fees, including everything, that also then does not get paid fully. It gets paid only in the same proportion as room rent. So that leads to a lot of problems. I think that's one. Second thing which also happens to a lot of customers at times is if they haven't declared anything on the proposal form, like for example, if you're a smoker or a drinker, but you haven't declared on your proposal form, or if you have a pre-existing disease like diabetes or hypertension, you haven't declared, then then again it becomes a problem at a later stage because your claim can potentially get denied. So I think these are the two things that everybody must be aware of, at the time of buying, after that. And probably just another thing that I'll add here is also cashless network of hospitals, because people, and this is specifically applicable beyond the tier 1 and 2 cities. In tier 1 cities, mostly cashless hospitals are there. But the moment you go to tier 2 and tier 3 cities, when you're buying a policy, make sure that you know the cashless hospitals around you, because what ends up happening is at the time of claim, you go to the hospital and the hospital says, sorry, we are not on the cashless list of this insurance company.
Sure.
So knowing the cashless network is also very, very important.
That would be a real pinpoint where you know that.
Very sorry. May I add one this thing? Amit has rightly put it across. I think this cashless also is confusing to a lot of people. Cashless does not mean 100% claims are paid. Something which are deductible, consumables not paid, you are not taken the rider. That is, you have to pay out of pocket. It could be 5 to 10%. You should be prepared about that, because otherwise people fight for every penny. People think that no, 2,000 rupees also can be deducted. It is not the case. Okay, so it's very important point that cashless also should not be taken in literal sense that 100% 1 rupee also I don't bear. It happens.
Rohit, please very, very quickly. It would be a real pain point for someone to know that my insurance policy does cover a certain amount, but the problem is that I have to pay cash for it right now and I'll get money only in reimbursement, but I don't have the cash right now. So is there any kind of a bridge available to the people?
If you are an employee, you could probably get an interest-free salary advance from the employer. That's one way to look at it. Second is, if you're kind of doing SIPs and stuff like that, you could pause your investment to generate some.
That would be a matter of my personal finance. Is there anything available from either the hospital side or from the insurance company side in this case?
See, on a reimbursement base, hospitals really doesn't do anything. And the insurance companies, it's very, very hard to kind of work with the back offices, TPA. I think I would focus on getting the claim passed rather than getting claim early. So it's a tricky situation, but no hard way, no easy out, no easy way out.
In that case, we would again stress this point. Please be aware of your cashless networks, because eventually you will end up paying from your own pocket, even if the money is reimbursed later.
Right.
Rohit, another query people ask is, how do I claim tax benefits on health insurance premium payments?
So, we should take the health insurance to mitigate the risk of, health insurance or health related costs, not really to kind of get the tax benefits.
Sure. Once that is done, now how do I claim the tax benefit on that? Under which section, under which?
Most, I would say majority of the investors do take this just to save the ATD tax. And I think it was pointed out earlier in the discussion, I think by Amit, you have these 25,000 and the 50,000 related.
Could you please just elaborate on that point step by step?
Sure. So you can just claim the ATD benefit 25,000 for your own family, and assuming your parents are dependent, there is an additional 50,000 limit available for senior citizens.
That is above 60 years.
Above 60 years, correct. So 25 plus 50, 75,000 can be claim exempted.
And this 25 plus 50,000 is above the ATC limit of 1.5 lakh rupees. Is that?
That's right. This is separate.
Sure. And that the provision of claiming that is available while filing the income tax return form. Is that right?
That's right. That's
Okay.
right. And I think recently, one of the budget last year or a year before, they also allow you to kind of pay for multiple years and then claim in a flexible manner.
Sure.
So, that option is also available.
Okay. Sachin and then Amit, a very common query that comes across is commonly health insurance policies cover hospitalization. People ask us, should I opt for a health insurance cover which pays for OPD visits as well? But then those covers are very costly. What should we do? Sachin, first you and then Amit.
Yeah. Okay. So again, it is our we are talking about basically not company specific, but I think it's very important that wellness is extremely important today, and wellness is having a huge scope. Okay. Wellness we have launched. Magic has launched a Health Prime Rider, which comes at a very small cost of 640 rupees in a year, and you get OPD benefits worth around 10,000 rupees in a year, 10 to 12,000 rupees, and you pay only 640 for the year. It is called Health Prime Rider. And OPD benefit which other companies are offering, it definitely comes very costly because OPD bills going to that particular network hospital, getting cashless, getting reimbursement. So reimbursement is a tedious process because for 200, 500 rupees OPD bills, when you go for reimbursement, it takes a lot of time. For company also, it's a huge cost. So those products are always costlier. But our rider is the fantastic and number teleconsultation, video consultation, health checkups. It's very important. So that this thing is 360-degree wellness we are offering, and that is extremely beneficial for the customers.
Amit, your take on OPD coverage?
So I think on OPD, the industry is evolving still. As Sachin mentioned, Bajaj has come up with a great product. I think as the industry warms up to it, the awareness will increase. There is definitely a demand for it, but I don't think we have a lot of great products out there right now.
Sure, from the customer's point of view, because what happens is some of
customers want it. Customers want OPD coverage. I don't think we have great products to give to them right now. So as companies are coming up with products like the Health Prime Rider from Bajaj, I think it will almost become the de facto add-on with most health insurance policies, where you will pay extra and also get coverage for OPD. There is no supply right now.
In whatever is available today, in terms of offering OPD coverage, there are policies that offer OPD coverage. It's just that those policies are very costly. Yeah. For a customer, does it make sense to spend that much money and get an OPD coverage?
Honestly, right now, no. I would say the right time is when you have the right products is when one should buy it.
It would seem like we are plugging Bajaj Insurance, Bajaj Allianz product, but then that seems a good option there?
See, it is a good option. I would say one thing, it is a good option if one wants only online coverages, right? So, telemedicine and stuff. From that perspective, Health Prime is a great option. I think if you really ask me what the customer demand is, the customer demand is a product which gives you coverage at your neighborhood doctor also. Sure. It gives me coverage at my neighborhood dentist, general physician, physiotherapist, and so on and so forth. So I think that is these kind of products are being built up, and I think
and those products are not at all available today. Is that what you're saying?
They are, but they are very expensive. So being available at the right price for the customer to pay is, I think, what is probably going to happen in the next 1 or 2 years, and that's when we'll see OPD as the de facto attachment along with indemnity products.
Okay, Amit, very sorry to interrupt here because your point is, slightly this thing. We are not having only that online platform. People can very well go to the doctor and get the OPD benefit. Okay, can very well go to a lab, get their health checkup done, get it reimbursed. It is not only online, it is everywhere. Physically, also you go visit doctor, that amount is paid cashless to the hospital directly or the doctor directly online. Okay. So that is also there. It is not only online. It is offline also. You can go and do it.
And Sachin, is it only available to the doctors that are in hospitals or the neighborhood doctors as well?
Neighborhood doctor also is there. Okay. You have to get authenticated bill. That is the biggest problem here.
Of course.
People get handwritten bills and claim, and we found some bills are fake. So it completely definitely. Loses the complete ball game because our intention is pure. But if people misutilize it, then we have to
so this discussion is not about not for those people. This discussion is about having your genuine expenses paid.
Yes, it is.
This discussion is not about making money using health insurance.
Right. It is reimbursement, cashless, everything is there. Your neighborhood doctor is also there. We have more than 90,000 doctors empaneled across India,
Okay.
ever increasing. And that health prime rider is such a thing that it is, as I said, it is unmatched. I am talking on record. It is unmatched. In 640 rupees, you can get 12,000 worth benefit, 12,000. In
Sure.
2,770, you get benefit worth 34,000 for the entire family. Not getting admitted at all, only OPD, health checkups and all those things.
Sachin, that's a great thing. It's just that if we talk any more about that, it will sound like we are advertising.
That's what I was avoiding. But the subjective,
But,
that's what, yeah.
one more question again, Sachin and then Amit. One more query that comes often to us is, if I have multiple policies, do they work? Can I club having multiple policies and buy cover from one policy and then another policy? Sachin, if you could answer first.
Yes, why not? Definitely. See, you cannot make profit out of it.
Of course.
You cannot make profit out of it. Okay. If your sum insured is exhausted in first company, you can definitely claim another company. Okay.
But then how would
the
that
same
work?
way, it works means what? You have to give bills to that company. You claim is settled.
Sure.
That company gives a certificate that this claim is settled based on this document. That company verifies with the first company and settle the remaining claim. Because what I'm talking about top up also, so a lot of people have basic policy with other company and they take top up from other company. So it happens. So both the companies pay.
Amit, does it make sense to have multiple policies with multiple providers, or just go for a higher cover than higher cover with one insurance provider?
I think it is always advisable to go for a higher cover with one provider.
One company, right?
Then it also seamless and easy because one does not have to coordinate with multiple insurance companies at the time of claim. Always advisable one cover and a large cover at that.
Right.
Sure. Then, but Rohit, in this case, what can happen is this solves the problem of our corporate cover and then personal cover. So if I can treat my corporate cover as my basic cover and then go for a top up on my own, does that work?
Yeah, why not?
We are skeptical about the whole, this top-up business, Shaleen. I'm not sure whether we have time for me to expand my thoughts. But when we are looking at our personal cover, I would first recommend to have a normal standard base policy of health insurance, and then probably look at a top-up or a super top-up separately.
Sure. So, but even a base policy could be used as a second cover, which would pay if my corporate cover is exhausted. Does that work?
That's right. Yes, absolutely.
Okay. And
that's a good strategy to let their personal cover stay and grow and build a track record of not having claim for so many years.
And Sachin, as you said, that logistically there is no problem. You can actually claim from one company and then the papers would move to the second company.
Right. Yes, no problem.
Okay. Sachin, Amit, Rohit, thank you so much for joining us. We have covered a lot of ground here, and as I was saying in one of the pre-interviews, this is just the beginning. It opens up, a lot of deeper conversations going forward. There is so much to cover in health insurance, each individual topics. We'll certainly be in touch with all of you, and then we'll have a much more conversations around this topic. Thank you so much for joining us today.
A great session indeed. Thank you so much, respected panelists, and thank you so much to our listeners for staying with us throughout. We hope to see you again next month for yet another set of insightful series with us. Thank you.